Hi, I'm John Galliano, Senior Director of Biopharm Catalyst.
Hello, I'm Chef, known as Chef Station, a 20-year vet in trading biotech stocks.
And this is Biotech Bulls and Breakthroughs. Just a reminder that we are not a registered investment advisory firm, and the views on this podcast are not intended to be financial advice. Invest at your own risk. Good morning, good afternoon, good evening, depending on when you're tuning into the podcast. Thanks so much for joining once again for another episode of Biotech Bulls and Breakthroughs. We're really excited to have Waseem on the call today from the Biotech Investor YouTube channel. I'm sure many of you who subscribe to Biopharm Catalyst also have checked out his channel, and if you have not, I would highly recommend doing so. It's really great in terms of the deep dives that he does across therapeutic areas and some things to take a look at from, in terms of what you should be looking at for investing in biotech stocks. So thanks for joining, Waseem. Really excited to have you on.
Yeah, thank you. Thanks, John. Thanks for the invite. No, it's a real pleasure, honestly. So thanks again.
Absolutely. I think for today, what we really wanted to do was just talk a little bit about, your background, kind of how you got started, and maybe a couple things that, you would want folks who are either new to biotech or even folks who are experienced in biotech investing to be thinking about. And we'll kind of just go through, just a couple questions to get a better sense for how you got started, and maybe hear a little bit about your thoughts on the current markets and some of the things that you're taking a look at if all that works for you.
Yeah. Well, thanks, John, for the question. I really would like to take some time answering this because I think it's really important. I know it sounds cliche, but I never thought I would be involved in biotech whatsoever at all, neither on the financial markets. I was born in Morocco, where there's no stock market. Grew up in a Muslim Arab family, going to a Catholic Spanish school. So I've always thought about the two sides of every outcome. Growing up home, my parents would say that they were right about everything. At school, I heard the opposite. So I've grew up with this curiosity of always challenging the status quo, but I never thought about biotech nor finance. My goal was to become a soccer player, which obviously I failed. Yeah, because if you hit 20 years old and you're not on the top 1%, you just cannot make it.
Yeah.
So at that age, I was like, well, what's in it for me? And that's when I moved to the US for college, and I didn't know what to pursue. Obviously, as a teenager, you're focused so much on one thing, and when that thing doesn't happen, you're kind of lost for some time, and that's fine, right? Then, what I was curious about the body since I was in sports, and I wanted to become a pharmacist. So my first job was at CVS as a pharmacy tech, and I remember the first day to be totally lost. It was fast-paced, tons of medication bottles, which I had no idea what they were for. All I knew was that the customers coming in wanted them fast, and sometimes they were angry. So I tried to do my best, and after 2 years, I was able to recognize the drugs, what their side effects were, and even from the bottles from far away, I would recognize, oh, that's metoprolol, for example. I didn't recognize the value of that because for me it was just a almost minimum wage job that I was just doing as a student. But that showed me that I didn't want to be a pharmacist. The job was just to fill prescription drugs, really long shift hours. I really value pharmacists' work, but it just wasn't for me. Then I thought, well, maybe if I'm able to create these drugs, it would be cool. So I moved into compounding pharmacy. So yeah, it was nice. You'd get all the suit, the masks, all the equipment, to mix up these drugs to make something of value to the clients. Um, After a couple of years again, I realized that I couldn't create my own drug. I only was able to follow an ingredients list and make it happen. Um, at that point, I really didn't. I thought I was not made for biotech or pharmacy, so I pursued the software route and landed at a pharmacy benefits management company, again pharmacy, doing software for them. All the insurance rejections, why something was rejected. So I was able to really understand deep on how that system works. After that, and it's funny when you can. I'm telling this story and I'm connecting these dots together because at this point it makes sense. But back there, I thought it was just a dead end job. My next job after that was at IQVIA, which I was part of building quality management systems. And when I got to the office the first days, I remember at the office having tons of portraits of the biotech companies and big pharmaceutical logos. So I was like, oh, so Novo Nordisk is a client, and then Lilly is a client, and then what is this company right there? And that triggered something deep inside, trying to understand what I was doing. All I cared about at the time, and honestly, was that it was a good check. I was able to buy my favorite car at age 26, and that was it. But now, after some time, and especially after COVID, where everyone became a clinical trial expert, that made me dig deeper into how things worked, how drugs are created from scratch, and I was able to connect a lot of these dots together. And I didn't speak about my finance background, but I was trading forex since I was 17. And it took me 12 years to understand that technical analysis doesn't work. So tons of money wasted and hours at night, non-sleep, trying to make money without realizing that without proper understanding of finance, accounting, which I came to understand during an MBA that I've completed. That's when all of it came together. And my biotech, biotech started around 3 years ago, 4 years ago. But really, I used to go through my friends' parties or having a drink with a friend, and I would pitch them a stock. Hey, there's this company, they're making this drug. You should check it out. And some of them, of course, they thought I was just talking nonsense. But after FDA catalysts, I would send them screenshots of my account, and they would be like, well, how did you know it was happening right at that time, right during that week? So then I realized I could add some value by creating a YouTube channel. And yeah, that's how it all started.
And so when was it official that how long has the YouTube channel been in existence at this point?
So my first video was on March 2024. So a little more than a year ago.
A little more than a year ago.
Correct. And I was very hesitant to make it, of course, because of what people would say about me.
Yeah.
Turning on the camera and just talking to nobody is harder than I thought.
Yeah.
And I remember my friends. Well, you get the most love from your closest friends,
Yeah.
especially if you're a male. So I remember my second video where I decided to show my face. And my friends were saying that it looked like a hostage situation. It was
Yeah.
like me asking for someone to come and save me. So, but yeah, I think you just improve. It's just a normal improvement. You just keep doing it, and it seems like I don't know. I'm not following any techniques, but it seems like my skills are improving.
Absolutely. And so you know, I guess in terms of the types of things that you cover in your channel, like, if you want to just walk through, what is it that, I mean, are there specific stocks that you cover? Is there specific indications or therapeutic areas? Or are you just kind of generally following what's happening in the markets and the news? Like, how do you kind of choose the coverage that you have on the channel?
Yeah, so I have two strategies. Strategy one is try to cover the stocks that are mostly followed, just to gain some views, viewers, subscribers. Um Sadly, some of these stocks are the ones who people should not be invested in. So I try to explain what the company is doing, and at the end, I try to give my opinion on if it's really a good investment or not, from my opinion. Of
Yep.
course, no, not financial advice.
Sure.
Then my other strategy, which I try to mix it, is trying to find those hidden biotech stocks with with great fundamentals, great balance sheets, great assets, targeting like uh, illnesses that affect millions of people.
Yep.
Those are the ones with the most upside. So I try to find them, which is sometimes hard, but thanks to platforms like Biofarm Catalyst, it makes it much easier than just wandering around Google.
Sure.
And yeah, those are the two strategies that I try to follow.
So that makes sense. So I mean, just in terms of your general process, it sounds like you're looking for you're screening for companies that have catalysts, but also you're looking a little bit deeper at the balance sheets of some of these companies, if I'm not mistaken. Do I have that correct?
Correct. And the thought behind that is when I buy a stock, I try to imagine that I'm a billionaire and I can buy the company, all of it at
Yep.
once. So, for example, if a company is worth $1 billion, a $1 billion market cap, I say, well, if I had my house and just food for a year and $1 billion, would I spend this $1 billion buying this company? And why? And if the answer is, oh, because the charts seems like it was worth $20 and now it's worth $1, and that means it's going to go back to that $20, which is what most people believe, that's a no. So you have to
Mhm.
really understand that you're buying a business. There are employees. There's a CEO. There's an executive team. The business has debt. So when you buy that business, you also acquire the debt. You acquire the cash. You acquire the office. You acquire the chairs, the computers, everything. So by going with this mindset makes me avoid a lot of the hype that sometimes, well, it's very common in biotech to see hyped up stocks that really are not worth as much as they're trading at.
Yeah, that's an interesting perspective. I mean, it's something that you don't hear. I don't hear a lot of, right, in terms of the way that you're thinking about that, but it makes perfect sense, right? Like when people don't think about it, it's like, okay, when you're buying a stock, right, you are technically an owner of the company, a very, 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 very small owner in a lot of cases, right? But you still are an owner in the company in public equity, right? And so if you just kind of think about that more at scale and say, hey, instead of me thinking about, oh, this is just like a small investment, I'm thinking about it from the perspective of what if this were like me buying the entire thing, right? And I think you raise really good points about you are buying a business, right? You're taking on the assets, you're taking on the liabilities, you're taking on the cash, and you're taking on the management team and their strategic positioning, et cetera, right? And I think sometimes in biotech particularly that gets lost in translation, and especially for like the really small companies, right, that are just like, they might be trying to get one drug to market, right, and they've got a really small team and people are just hyper focused on that one drug, whether it's going to be successful or whether it's going to get FDA approval or whatever, right? And I think that perspective is a little bit takes on a little bit more of the, how does it function from an operational standpoint, right? And it sounds like that's a little bit more of what you take a look at as well.
Yeah, exactly. And I make mistakes too. I've made a big mistake with the CAR T cell therapies. With, for example, Iovance.
Yep.
I bought around $44 a share. That was my average. Went up to 18. My friends, all of them sold at around 16, and they held all the way down
Okay.
to losing about 10%.
Yep.
And what I didn't understand was that the logistics of what they were doing. Their profit margin was very small. And in biotech, that's the driver for investors. They try to go for the largest profit margin possible. So yeah, we learn from that and we move on. And yeah, I was sad for a couple of weeks because everyone was telling me you should just sell, and I was really believing on what they were doing, but I totally missed the that specific point. But well, we move on, we survive another day, and we keep fighting.
Well, you know, it's great too because again, a lot of times folks, particularly in this space, I mean, there's a lot of egos that run in this space, right? And everyone wants to talk about the wins, right? No one wants to talk about the losses. So, but I do think it's particularly important in the biotech space to talk about the losses to feel like, okay, what went wrong there? I mean, we get that question very often for biopharm catalysts is, you know, oh, well, you know, this drug got FDA approval. Why was the stock down 15-20%? Like we've seen that happen before. And it's like, okay, well, there's a multitude of reasons. Maybe, you know, the investors didn't like the side effect label that the FDA required, right? Maybe there was too much competition and they didn't feel like the drug could actually be sold on the market. Like there's more to it than kind of meets the eye. It's not as binary as just like drug gets approved, so that means stock's going up 20%. And I think to your point, understanding that a little bit more and having folks like yourself talk about, you know, the like some of the losses that have occurred, right, or the mistakes that have occurred, and what you learned from them. So I guess kind of segueing, I think it's a great segue into another question I had is for folks entering this space, or even for folks who have been in this space, like, you know, you've had this channel now for a year, you've done a fair amount of investing, and you've learned a lot. What would you want to know if you were just starting out? Like, what do you know now that you would want to know if you were just starting?
So, number one, good science does not always mean good investments. There are great science projects that are breakthrough, but there aren't just enough people to sell those assets to. We have tons of biotech companies working on rare diseases, and sometimes these companies can sell up to 300 people a year. Maybe there's an illness and only 300 people a year are diagnosed with that illness. So you already know that that's the maximum amount of sales that the company can make. It took me a while to realize that or to look into that. So yeah, companies like CRISPR, where it's gene editing, and that the science is amazing. You can actually cure a disease for $2 million.
Yeah.
But then you're like, well, unfortunately, when you're investing, you want recurrent revenue,
Yeah.
and you want to make more sales, and you want your drug to be open for more and more illnesses. And so if you're curing the disease, where's the money? Who's going to pay the two? Well, first, who's going to pay the $2 million when they can manage the disease with other drugs? Is the insurance going to pay for it? Are the people going to pay for it? Is the government going to pay for it? So all of these questions need to be answered to build your case if this is a good business or not. Now, without a doubt, the science is amazing. We're making real progress on biotech, but from an investor perspective, you have to take into account sales. I know sometimes it sounds like all we care about is money. It's not true. But people are investing in these companies and taking huge risks. The risk of a biotech company to fail is huge. I think more than 80% of companies fail.
Yeah.
So you have these people putting in millions and billions of dollars at risk, and they expect some revenue at the end of the day. So it's all risk reward, and I think those are the two most important things. The third one would be to start looking at balance sheets, understand the cash burn, the runway, and if the company has debt, if there are any warrants, and understand dilution, because most of these biotech companies get funded not only with debt but also dilution. And if you're investing in this company and they dilute you, meaning they create more shares to fund their project, that means you are owning a little less of that company, which affects you and affects the stock price as well.
Absolutely. No, that is those are great points. And I mean, I think, you mentioned about the cash runway, the cash burn. That's something that we track at Biofarm Catalyst through
Yes.
our cash database as well. And it's definitely something that needs to be looked at in addition to just the catalyst, right? So that starts getting into more the cash flow, the balance sheet, the financial piece of it, of the equation, which you just mentioned. So I think that makes a lot of sense. I guess, just stepping back for a quick second. I mean, is there any, we'll say, whether it's therapeutic areas or indications, or even just like companies, biotech, pharma companies right now that you're excited about? Anything that's kind of on your radar or your watch list, whether it's for the next couple months or the next year, or however far out?
Yes, so there aren't many, honestly. Um, it's a crowded space, but I try to find some of. I try to play risk asymmetry.
Yep.
So if I'm putting $1,000 on a stock or buying a company, all I can lose is $1,000. But I want to find the ones that are gonna 10x or 20x, right? So in order to find the ones that are gonna 10x or 20x, well, they need to be well run. They need to be their asset or their molecule or drug it needs to work, and needs to work on a large amount of people. Um, so you don't find many, um, maybe 2 or 3 a year.
Yeah.
It happened with Cormedics. It happened with Verona Pharma. And I'm surprised that these companies were not acquired, because normally when phase two trials show up, the results show up, and these big companies, pharma companies, see these results, these small companies tend to get bought out really quickly, and I don't like that. I know a lot of biotech people want their companies to be acquired. I don't want them to be acquired. If I own a stock and I bought it for $10 and it's going to be acquired for 20, I'm doubling my money. That's great. But if that company can commercialize successfully, it could 10x, 15x, 20x.
Yeah.
So I don't want them to be acquired.
Mhm.
So Cormedics is a great example. Verona Pharma is another one. I was looking recently at Insmed. They just had the phase two readout on the results.
Yep.
Stock rallied tremendously. Um, I would, I don't own it as of now. Um, I was waiting for the PDUFA. I think the date is August. I was waiting closer to that date, but it's already rallying. I think today it was around $100 a share. Um, the case with Insmed is it is a company that focuses on rare diseases, but for this last drug that they're looking for an FDA approval in August, treats around 70,000 people. Well, treats bronchiectasis, and around 70,000 people a year are diagnosed with I can't say that name again. Sorry,
That's right.
this is tongue twisters, bronchiectasis, and so that's a big number to be a rare disease, and especially when you have well, they say there are around 500,000 people living with bronchiectasis in the U.S. So I thought it was a good play. The stock already rallied. I believe it's priced to peak sales. So as at this point, I believe it's overvalued. It would it would get to that valuation once they commercialize and they can prove that they can sell. But at this point, I think it's a little overvalued. Another one, and I had it here in my notes, is uh, Xenon, ticker symbol XENE,
Hmm.
and that's for epilepsy. And their phase three results, I think they were out. They're amazing, and they have a PDUFA early next year. For example, that's a drug that would affect millions of people because of epilepsy. I'm looking forward to their approval. They look to have. It seems like they have good safety profile, good efficacy compared to other similar drugs. So yeah, that's probably well. My next videos are about Insmed. I'm a little
Yep.
late,
Yep.
but the other one is going to be Xenon.
Very cool. And I guess one last question on that. Do you mentioned about several upcoming PDUFAs? Do you have any like are you focusing on companies that are or excuse me drugs that have specific specific phases coming up? So for instance, are you focused on, let's say, only phase 2, phase 3 and PDUFA? Like is there any stage that you have more emphasis on, or is it just sort of kind of whatever based off of the based off of the fundamentals of the company and what the catalyst is, that it would differ?
Yeah, so my strategy is very simple. I use Biopharm Catalyst to go into the calendar, see what are the catalysts for PDUFA. Those are the important ones. And then I look at phase 3 trial results, the expected date, right? Because it could be like second half of 2025. It's nobody really knows when. But I'm looking for those specific companies which are considered late stage
Yep.
because they are de-risked, meaning they already went through phase 1, phase 2. You have an idea of what the effects are, what the safety is. Uh, there's less cash burn coming in because remember, phase 3 could take 3-4 years to be completed. Well, from phase 3 to PDUFA. So for 3 or 4 years, that company needs to be open, pay all its employees, keep the lights on, pay Spectrum or Verizon or Frontier, pay the phone bills,
Yep.
pay for everything without having any income. So of course they're gonna burn that cash, and you don't want to be, well, as an investor, you don't want to be there during that time.
Yep.
So I try to limit that cash burn as much as possible. It's very hard to time because some of these stocks pop on phase 3 results and never go back to that stock price ever again, like
Yep.
with Verona Pharma. So yeah, it's very hard to time, but that's my strategy.
That makes perfect sense. Well, Wasim, I really appreciate all of your insights and the time. I think that was pretty much all the questions that I had for today. Was there any last words of wisdom you wanted to mention?
Yeah, I think I started the channel during the worst time uh, of biotech ever when it comes to the market.
Yeah, it would have been 2021 when all those IPOs were happening would have been probably better, but that's all
Yeah.
right.
So last year and this year were really bad, but I think that what's coming is really good. I think
Yeah,
with lower rates, um, with more and more drugs are going to become generic by the end of this decade. We're going to see a lot of mergers, acquisitions,
yeah,
breakthroughs. It's going to be very interesting to see what's going to happen with AI, including AI in all these trials. Um, so yeah, it's a great time to be alive. It's a great time to be in biotech, to learn about biotech because I really believe that the next 5 to 10 years are going to be biotech is going to be huge. Technology, finance, and biotech. That's my bet.
awesome. Well, thank you so much for joining and for your perspectives, and thanks everyone for listening to another episode of Biotech Bulls and Breakthroughs. Be sure to check out Wasim's YouTube channel, the Biotech Investor, and we will be back on at the beginning of July with Chef to discuss some of his watch list and his catalyst for the next several months. So stay tuned for that as well. Thanks so much, everyone.
Thank you.